looking for financing, but you don't think you're going to be able to qualify for maybe traditional loans or some of the tougher ones like SBA loans. So we're going to cover 3 or 4 of our favorite options for alternative lending. And while we're going through this, if you have any questions, throw them out in the chat. I'm more than happy to answer them for you. Maybe even help you find some funding today. See if we can find you a business loan that will fit for your situation. Before we get started and before we jump in too deep, next Tuesday we have coming up, if you're interested in learning how you can offer business credit and business financing as maybe an add-on service or maybe a full-time side gig, or you just love it and you want to be a part of it and you want to help people out. We have a free webinar that's coming up, and you can register for that or learn more at creditsuite.com/brokerwbn for webinars. So it's creditsuite.com/brokerwbn for webinar. That's next Tuesday. Hope to see you guys there because it'll be awesome. All right, so let's jump in. Are you having problems getting business lending? Like, it's not a surprise that business loans are not always the easiest things to qualify for. And as we're jumping in here, I see that several of you guys are jumping in. Feel free to tell me where you're from. Love to see you guys chatting in here and communicating. And like I said, if you have any questions, let me know. I'll answer them and help you out however we can. So, look, the problem with getting business loans is that a lot of times what we think about with business financing is we think about all these really big complex commercial deals. We think about banks with these big in-depth underwriting guidelines where they're going to be looking through all of your personal assets, all of your personal income, all of your partner's information. You put your house on up as collateral. I mean, there's just a lot of stuff that goes into it, and it can really get intimidating. It can get overwhelming as a business owner if you know that you need money to grow your business, to be able to take things to the next level. You know, you may be running a great business, you've got consistent revenue, you've got good client flow, everything's moving well, but you're just kind of stuck with moving to that next level, or you know that with your current budget, it could take you, 6, 7, 8, 9 months, a year to be able to hit that growth potential, opposed to getting financing now where you could really streamline that process. So if you have been turned down by traditional business financing, or you've talked to a bank and they've said no, you still have options. The beauty is there are hundreds of alternative lenders available, and they have flexible guidelines. It's not as stringent. They're going to work with you. They're going to make sure that the loans, one, is good for you, but they're also going to make sure it's good for the bank and for the lenders. But there are a lot more options than what you may realize, and we're going to cover some of the most popular ones today. So the thing that's great about alternative lending is typically it's faster. Like when you start looking at SBA loans, it's not uncommon for those to go 2, sometimes 3 months until they actually fund. And now when we say funding, when you're talking about a loan, that's when it's gone through underwriting. You've already been through the pre-qualification process. You've already walked through that step. The funding is when you actually get the money in your account. So when that money hits your checking account, that's what's funding. Alternative lending is popular because a lot of times you can get funding fast. I mean, there's lenders out there that we've seen that 24 hours, 48 hours from application, money starts hitting our clients' checking accounts, which is just awesome. I mean, very helpful if you're in a bind. So that's one of the reasons, and it has less income and asset requirements, meaning you're not going to have to go through the process of providing 3 years of bank statements. You're not going to have to worry about like business plans and all these different models of how they're tearing things apart. It's really pretty straightforward on their underwriting criteria, which is why alternative lending has become way more popular within the last, I'd say, 5 to 10 years in the business side. And it does not rely as heavily on personal guarantee, meaning that you can have credit issues. You can have, there's some of these programs we're going to talk about that go as low as a 500 credit score, a 500 FICO score. So it really gives you that real feeling of alternative lending where it's going to work with you. You don't have to be picture perfect, Mr. CEO, that it's got everything perfect, running millions of dollars where you barely even need a loan. No, these are more geared towards us startups, a small business, those of us out here who are grinding, hustling, and need that money to be able to take things to the next level and really start generating some substantial revenue for the business. So Traditional lending is far from the only game in town. So what we're going to talk about is we're going to cover our four, and the order that we're going to be talking about is the credit line hybrid. We're going to go over business revenue lending options, security-based lines of credit, and one of my favorite, which the more I learn about this, the more I enjoy it, is equipment financing. And I have no good logical reason of why I love equipment financing. I just find it fascinating. I live in Kansas City area. I live in the rural area of Kansas City, so I'm in the middle of a bunch of cows and cornfields. So like I see equipment all day, every day, tractors, and so I always find it fascinating because I know there's millions of dollars on these farms that are tied up in equipment, and it's a great way to get things going. So let's jump in. Let's talk about the credit line hybrid. So first off, what is the credit line hybrid? The credit line hybrid is one of our most popular, if not the most popular funding option that we have, alternative funding option. I personally I love all these. I mean, I picked out these just for you guys because I like them so much. But with the credit line hybrid, you can get access of up to $150,000 in unsecured revolving credit lines. The reason that's awesome is because unsecured, one, means that you don't have to worry about putting up collateral. It means you're not putting your house on the line. You're not getting UCC filings. You're not having to put. It's not secured by anything. And revolving is just that. It means that you're able to make those payments, and then with those payments, you can actually turn around and when you start using, man, my brain's scattered today. When you start using the credit lines, you're able to pay them down and keep reusing them over and over again, meaning that it's like you have this credit line that's just available to you anytime that you need it and anytime that's available. And it gives you lifetime access to your credit line. So that way it's not like a term loan where you may get $100,000, you make, 2,500, 2,000, $2,500 payments for a year and then it's gone. No, it's like a credit card. It's like a line of credit. It's just a hybrid between all the different options that are out there. And it's the perfect solution for startup and small businesses looking for fast money. Um, uh, we see I've got a couple comments. I haven't had consistent revenue. However, I've got a lot of funds that have sat in our business bank account for over a year. Should I begin to apply for net 30 vendor accounts? That's actually on the business credit side. So on the business credit side, having money in your account's a good thing, but it doesn't impact you on the business credit side. Business credit doesn't rely on company assets. Now, that does help when you start getting into some of the secured financing options that we're talking about. Um, so why do our clients love the credit line hybrid? First off, fast approvals. You can be pre-qualified within about 24 hours. So you can put in your application. You're going to hear back from us within about 24 hours on what your qualifications look like, what terms it looks like, and then from there, then it starts to go through underwriting. Then the process of actually getting the credit line starts. Next, it's easy qualification, barely any documentation at all on the credit line hybrid. Basically, what they're looking at is, do you have a business established and do you have the credit to qualify? Outside of that, there's no income requirements, there's no asset requirements. Sorry, your name didn't pop up in the software here, but for the question of haven't had consistent revenue, but have a lot of funds, the credit line hybrid is actually a great option for that because there's no income documentation, there's no asset documentation. It's the closest thing to no doc financing that you're going to find in business lending. It's really designed to help out the startups, get you up and going, and get you what you need. And there's no time and business requirements, meaning the company doesn't have to be there for years and years on end for you to be able to qualify for this funding, which is awesome. And again, it's revolving terms, meaning you're going to be able to use it over and over again, and it starts to become a part of your financial ecosystem inside of your business. So those are some of the top reasons that we've heard from people that love the credit line hybrid, along with low intro. Man, I put more on here. Low intro rates. The credit line hybrid, you can actually get 0% interest for the first up to 18 months. So a year and a half with 0% interest on revolving credit lines. Just a win situation. It's a great product, which is why it's one of my favorites. So what does it take to qualify for the credit line hybrid? No income or asset documentation. We talked about this as one of the values. It's the same thing. You don't have to show that you're running any sort of income through your company. They're not looking at your bank statements. They're not looking at your tax returns. They're not looking at assets. They're not filing UCC filings. There's no liens. There's nothing like that. Everything is really secured, is secured by your credit, which we'll get into here in just a second. Next up, the qualifications is you can get up to $150,000 in business credit lines. Now, a lot of times people are asking, how does this work? So basically, the way that, well, let's get through these other couple criteria first, and then we'll go back to this 150,000 because I think it's one of the most common questions asked. With the credit line hybrid, it does lean heavily because there's no income or asset verification. It is leaning heavily on your personal credit. So they want to see that you have at least a 680 credit score or higher to be able to qualify. And in that, there are some qualifications, like you need to have a good credit card with a high credit limit that's been open for at least 2 years, I believe, was the last underwriting guideline. And the beauty of it is you can actually work with a credit partner to qualify if needed. So if you personally, as a business owner, you're struggling with your credit, you can actually bring in a partner, or if you have a partner that's got great credit, they can actually qualify for this financing for the business without you, basically, and it still goes in the company name. Now, let's circle back to this $150,000. So the credit line hybrid will finance you for up to $150,000. The way that you get that is actually dependent on your personal credit lines. So the pre-qualification process looks, they do a soft inquiry on your credit report. So it's a soft pull. It doesn't have any impact on your credit score. It's very easy. No harm, no foul. But from there, they're looking at what they're obviously pre-qualifying you based off their credit requirements, their score requirements. But the other thing they're doing is they're looking at how much credit do you have available personally. Now, the beauty of business credit is that business credit actually has substantially higher amounts that you can qualify for. So they're looking at that, and then there's a multiplier. So it's about 5 times what your highest credit limit is. So, for example, if you have a $10,000 personal credit card that qualifies for for this program, then you would get access basically to about $50,000 with the credit line hybrid terms. So that's what it's looking at again is your highest personal credit limit to be able to qualify you. So if that it's a great program. The thing that I love about it, it's not perfect. But it's beautiful for startups, and that's the one thing I can tell you. No matter how long you've been in business, whether you're just getting started or you've been at it for a while, if you have fluctuating income, this is just quick, easy access to credit for your business. Little documentation, next to no documentation, which makes it beautiful and makes it one of our favorites, one of our most popular alternative lending options. Second one, business revenue lending. Revenue lending is really popular because it's based on your revenue. Revenue lending is business financing based off the cash flow or revenue of the business. Now, the reason we chose business revenue lending opposed to like merchant cash advances, anything like that, is that with business revenue lending, it's actually looking at all the revenue coming inside of the company. So with like a merchant cash advance, they're looking at how much money is coming through that merchant account. So a popular option that we see a lot is people talking about like PayPal loans. PayPal has it where they'll give you a merchant cash advance based off of how much money you're running through your PayPal account. But that's only what's running through PayPal, and all merchant advances work the same way. With business revenue lending, they're looking at all the revenue coming inside of the company. So if you've got affiliate money coming into your checking account, you've got credit card statements, you've got ACH payments, you've got wires coming in. It's taking all of that income into consideration, making it easier for you to qualify for more money, which is part of what makes it so popular. Usually it's offered as a term loan with fixed payments, which means that you're going to have consistency. But with a term loan, once it's done, it's done. Once it's over, it's over. Now, the other thing about business revenue lending that most people don't ever talk about is business revenue lending is one of those few little areas inside of business financing that you can actually establish a really good relationship with your lenders. And we've seen companies who just consistently have business revenue lending going. And when you sit down and talk with them, they're like, look, the longer we do this, the more we do this with the company, the lower the fees go, the faster the turnaround times come. Basically, it just gets to a point they're like, you need money, and you go, yeah, and they just give it to you because you've established that relationship with them, you have that rapport, you paid it off. So as you're jumping into as you're looking at revenue lending, the cost of it kind of goes down over time. The more you're building that relationship, the more you're working with people, the more opportunity that you have to actually be able to access that money at cheaper rates and better terms as you develop relationships with the company. All right, so looks like we have another response. Thank you for addressing my question. I actually do have a business partner that may qualify for the credit line hybrid. Would love my info regarding the program. Awesome. It looks like we have. If you go to looks like Alfredo just put it in here for me. But if you go to creditsuite.com/CLH, which is short for credit line hybrid. Um, Yep, creditsuite.com/CLH for credit line hybrid. That's actually going to get you access, let you see it, and go through that. So if that's a great fit, we'd love to help you out there. It's a great product. So let's talk about why our clients love business revenue lending. Now, I told you at the beginning, there are some of these financing options that you can get as quick as 24 to 48 hours. Business revenue lending is one of those options. Super fast funding. Sometimes we've had lenders that have come on and told us that they've gotten deals done as fast as 24 hours. That's not always the rule, but it's the exception. But sometimes it does come through really fast. 48 hours is actually very realistic, and that happens quite a bit. So super fast fundings, meaning that if you get into a bind, you can get your money quick, which is always wonderful. Has little emphasis on personal credit. Personal credit more, they're just looking at it going, okay, are you going to file bankruptcy? Or are we going to lose our money? No. Okay, great. We'll give you the loan. Easy documentation. It's revenue lending. It's just looking at your bank accounts and qualifying you based off of that. And you can get big loan amounts. So let's talk about some of the terms of the business revenue lending. First off, it only requires 1 year time in business. When they're looking at your revenue to be able to qualify you for the financing, they're looking at that time in business, and usually they're going to look between 3 to 6 months of revenue. So they're going to take a historical snapshot of going, here's how much money the company's brought in 6 months. Here's their consistent monthly average based off that 6 months. That's why it takes about a year, is they want to see that you got a little bit of time in business and that what you're doing is consistent. It's not like you just hit a windfall in 3 months and all of a sudden you're there. FICO score 500. I mean, that's everybody has a at least a 500. If you don't have at least 500, that could be an issue. And loan amounts up to $500,000 secured and up to $150,000 unsecured, which is quite a bit of money. That's especially for what you're getting, that fast turnaround times. And again, documentation verifies revenue with the bank statement. Super easy, nice, fast, easy money if you need it. Again, that's business revenue lending. Now let's talk about number three. Number three is I'm going to say this about all of them, but security-based lines of credit. I love security-based lines of credit for those of you guys who have investments, and it's awesome. Security-based lines of credit are revolving credit lines that use securities to secure the business loan. And security is actually, I have it down here. Securities can include stocks, bonds, mutual funds, annuities. And basically what it's doing is it's taking, like, let's say you've got $50,000 in stocks that are being traded. It takes those and it puts a UCC filing against those stocks, so that in case of default, they'll actually go through and they'll acquire the stocks. Most of the time, they're going to cash them out, get their money back, and go on. But it's basically how it works. It's just the simplified version. So the reason why our clients love the security-based lines of credit is, first off, you keep your investments, which I think is just a smart move, because at that point, if you've got your stocks invested wisely, you're making good money. You're going to make more money than what you're going to spend on interest, which I just love. I think that's just smart business. It's smart money management. You get to keep all the interest that they earn. So any returns that those stocks are getting, even while they're securing the funds, you're still getting paid on those. You're still making money on them, which is just a great way to maximize your money. It gives you a revolving line of credit for long-term use, so you can use it, pay it down, reuse it. And personal credit is barely a concern. And there's actually a lot of security-based based lines of credit that don't even have personal guarantees. They may even just review your credit. But just like anything, the better your personal credit is, the better rates you're going to get, the better terms you're going to get. It's just it makes it much easier. And one of the beauties of it is they have great rates, low fees, because when you're looking at security-based lines of credit, they're secured. There's money there that's backing them. You have that money available. You could get access to that money. You would just be cashing out your stocks, and they understand that. So they keep their so these lenders keep their rates low. They keep their fees low because they know that you've already got the money available. You're just securing it, and so it's a great option. Again, you can keep making money and get access to the funds that you have without having to cash out all your investments, which it just makes for easy financing and easy qualifications. So let's talk about the terms. Most stocks and bonds are okay. I can't get too technical on that, but most of them are okay. Very bad credit is accepted because, again, the stocks basically act as cash. The stocks, bonds, mutual funds basically have a cash value, so they're not as concerned about your personal credit because you're securing a loan with cash that's available. And for our, I'm sorry I didn't get your name on that, but for our question about lots of funds that have sat into your bank account, a security-based line of credit may be a great option for you with that. Taking that money and putting it into a mutual fund, putting it into stocks, bonds, something safe, something that's got a pretty decent yield. Maybe you could put it in there and use that to secure a business loan, so you could start keep making money on your money and use it that way. Now they don't want to see any bankruptcies or foreclosures within the past 3 years. So they want to see a little bit of time past everything. And that 3 year mark, just in case you're ever running up against that when you're looking at business loans or personal loans, that 2 to 3 year period that lenders like, it's really it's kind of a cushion. Once somebody's been through bankruptcy or foreclosure, that's about the amount of time that it takes for any additional legal proceedings, any additional assets being seized or being turned over to the courts. They've got a little bit of time after everything's been filed, and that's why they do that, is just to make sure that there's no money that's going to be taken. Because when you go through bankruptcy, they actually make you they can come in and take money from you for 2 to 3 years, I believe, after the bankruptcy, like if you get an inheritance or something along those lines. So just keep that in mind, that bankruptcies and foreclosures, they still have a little bit of time on that. All right, let's jump into equipment financing. What is equipment financing? Business loans used to purchase and secure by equipment. Okay, so pretty straightforward. You buy equipment with equipment financing. Straightforward. Equipment can include semi trucks. We were actually talking with the lender, Fast Track, FAASTRAK. Track. I'll spell that out and throw it in the chat for you guys here. We were talking with a lender at Fast Track that offers equipment financing. They've actually got semi financing for companies that are newer, which is great. There's a lot of flexibility that's come out lately in equipment financing, where they've got some easy qualifications. The other thing you can get with equipment financing is, like, if you're running a t-shirt shop, or you're running something where you need a machine to actually make the products. Other things that you can use for equipment financing that fall under that equipment or machinery: phone systems. If you need computers, there's a lot of different options. There's software packages that can qualify for equipment financing as well. So there's some flexibility in there in what you can use with it. Sometimes you have to be a little bit creative. And then heavy equipment. Again, I'm from the Kansas City area. I see all sorts of equipment all the time, but this heavy equipment is actually really helpful for construction workers, or if you have a career or you have a company that requires equipment, you can get access to the equipment that you need, use financing, and it makes it really easy, instead of having to go out and rent everything all the time and spending money off your job, knowing that you've got those assets. So here's why clients love equipment financing. Easy qualifications. When you're getting started, a lot of them will just take bank statements to be able to get you going. Again, the equipment's being secured, or the the loan, it's being secured by the equipment, which is purchasing the equipment, which means that most of the time the equipment is going to have the exact same value as what you buy it for. So the qualifications are reduced because it's secured financing. There's something there securing the loan, which makes it where they're going to be a little more lenient with you. You can get access to the equipment that you need to succeed. That is by far probably the best reason. Get the stuff that you need to get out there, start making money, get out there and start hustling and do it. And another reason is that it builds your company assets, because like if you start really kind of looking at all the different equipment that's out there, you look at some of these farms, they may like have these little tiny rundown houses, and they got these big tractors worth millions and millions of dollars. And I know some of them lease it, some of them buy it. But these companies that are buying all of these companies that are buying these assets, they've got millions of dollars wrapped up in their equipment. And like as you progress in business, you'll get to a place where you can take all of those and you can kind of use them as a blanket and just do some really creative things as the company grows, as your income grows. So equipment financing is one of the only things that actually lets you build the assets for the business while making money with it at the same time. And again, it's flexible. It covers a bigger range of equipment than what you would ever expect. It's not just semis. There, like I said, there's office equipment that's available, computers, different things like that, software. Especially as you start getting into the enterprise level of software, there's financing available for that. So what are the terms that equipment financing is looks at? Financing up to $10 million. There's some big equipment out there that you can finance. There are some options with no personal guarantees because, again, it's secured by equipment. It's not as risky because it is secured like that. Credit is a minimal issue. Some of the lenders, like Fast Track, I believe they have a minimum credit score in the 500s. So it's pretty minimal. And again, the equipment serves as collateral. It's pretty basic. It's pretty straightforward financing. Some of these companies now are starting to take bank statements. Startups, time in business is a lot less of concern for a lot of these companies because it's secured by the equipment as collateral. So let's talk about finding your financing. So we covered some of the most popular lending options, alternative lending options that we see. There's still a lot of other options. You've got 401k rollovers, the ROBS program. There's merchant advances, like we had talked about. There's term loans. There's all sorts of different options that are out there. Alternative financing is a great stepping stone to be able to get your business the money it needs, get the growth in, start making some more revenue, and work on improving your fundability to be able to get to the point that you can qualify for those traditional loans or the SBA financing where you can get the millions of dollars at the really cheap rates and the good fees. So if you want to find out more, if you want to find out what you can qualify for, you can schedule a free business financing assessment with us. And during that financing assessment, our account executives are going to walk you through the process. They're going to look at what your company's strengths are. They're going to tell you for what you can qualify for, what you can do to be able to improve your fundability so you can qualify for different types of loan, look at your business credit. I mean, all sorts of stuff to be able to help you out and get you on the road to moving forward with getting the funding that you need. And also, if you want to find out some other ways that you can get money for your business, we have a free financing library. It's a guide. It's at creditsuite.com/27, and it's going to give you 27 different ways that you can get cash for your business quickly. It's going to cover a lot of the alternative lending options, but it's also going to look at some of the other things like peer-to-peer lending, private equity. I mean, all sorts of stuff that's available. And if you're one of those old school people, and I have to remember I'm in digital marketing, but that doesn't mean that some people don't like to call. You can also give us a call at 877-600-2487. Or go online to creditsuite.com/consult for a free consultation. And we would love to talk to you, help you find out what you need. And look, if you got some value out of this, if this is something you think your friends and family can benefit from, or your network, feel free to share this live stream. Just use hashtag Business Credit Toolbox, and you can get access to 5 free tools to easily and quickly build your business credit that's not linked to your personal credit, just for sharing the live stream. You can find out more about that at creditsuite.com/toolbox. And that's all I got for you for today. Appreciate you guys hanging out with me. Glad I got to answer some of your questions and help you guys out. Again, if you have questions, check us out at creditsuite.com, 877-600-2487. And again, if you like this kind, if you like lending, if you like helping business owners and entrepreneurs find money, join us next Tuesday for the live webinar. A lot of cool things happening. Ty's going to be on. He's going to be talking about. He's going to show you how you can offer business credit and financing by partnering with us. Just lots of cool things. Just show you this again, just so you can have access to it. You can find out more about that at creditsuite.com/broker WBN. And again, that's next Tuesday. So hope you guys all have a great day. Thanks for hanging out with me today, and we will see you next time. Thanks a lot.